Good morning, good afternoon, or good evening. This is Property Management 101, and for today's video, we're going to be discussing cap rates, what it is, and how it's used. So please join me how I break down why cap rates are important in real estate in less than 10 minutes. Another video will be really helpful as far as understanding the contents of this video is understanding the NOI. I've released another video talking about NOI, what it is, how it's used. It's going to be important for you to understand NOI because certain formulas we're going to be talking about today as far as how to determine what a cap rate is or why it's important will be helpful to understand the NOI side as well. I'll post a link at the end of this video. I'll also include one in the video description if you're curious on watching that video, and I'll also include one in the top corner page now. Now let's review what a cap rate is and what is it commonly used for. So addressing the first thing, what is it? A cap rate is typically used as a percentage as far as a number, and this is very helpful for individuals that are looking to acquire property or looking to sell property, and banks and financial institutions as far as how they value a particular property. The formula to determine what a cap rate is at a given property is actually very simple. It's your NOI divided by your asset value. Oftentimes, this is what maybe someone is willing to pay for the asset, and that equals your cap rate. Now, depending on the cap rate, this may be something for a particular asset that may be something your company is willing to make an offer for as far as acquire, or it could be a situation where that's the deal breaker as far as they're no longer interested. Or it could be a situation for a bank or financial institution that'll help determine the lending loans of that given asset. So it's going to be really important that you understand what they're evaluating as far as that formula for a given cap rate. Now, when it comes to operational side of the property management industry, cap rates tend to not come up too often. This is not something from an operational standpoint that'll come up often as you work with vendors and residents and your staff. This is really only going to come up if your property's on the market for sale, if your owners of that given property are looking to possibly refinance your property, or maybe an odd situation like there's an acquisition being considered for your property that may be part of a portfolio that is looking to possibly be purchased, or if it's maybe moving to another entity. There could be some situations outside the most two common, which is refinancing and your property is possibly up for sale on the market. If you hear cap rate or that term getting thrown around, this is something that if you're not aware of your property being sold or refinanced, you may want to ask some additional questions of why, because typically this is the only situations that a cap rate is typically used. Now, for you owners or potential investors, when it comes to cap rates, how they determine an asset's value, what you really want to consider is your strategy behind this. And what I mean by this is that maybe for some buyers, a lower cap rate may be not an asset that they're looking to buy because it's not in line with their given strategy. But maybe for you, who you're a long-term holder, you want to invest for the long term, you're looking for appreciation of that asset, you're confident in that market that it's in, that it'll be growing in value. Maybe something that's for your strategy going to be an asset that has a lower cap rate be something that you're willing to live with. So this is really why it's important to understand your strategy before you necessarily evaluate that cap rate, if it's something that works for you or not. Knowing your strategy is going to be key for that. If you're enjoying this video and you're learning something new, please don't forget to like, subscribe, and turn on notifications for future videos. Now, understanding what cap rate is, you also want to understand how and when is it used. If the cap rate is lower, then that may mean for a given investor or bank or financial institution, it may be determined that is more of a risky asset to invest in. This is why you may see not as favorable terms when it comes to that lending institution, when it comes to maybe an asset that has a lower cap rate, or if when it comes to an investor, that may be why their maybe offer is lower than expected because that cap rate is saying, hey, this asset may be a little less risky. It may not be income producing as much as we thought. So this is maybe all the reasons why questions comes up when a cap rate is lower. And obviously the opposite is true if a cap rate is higher. So understanding what goes into it, how to positively affect that is going to be really important for your boss as well. To give you some averages and what a typical cap rate will look like, this video is actually being filmed in Q4 of 2024, but the national average for cap rates in 2023 was 4.9%. So that should give you an idea of what a typical cap rate is. Now, if you start to compare that to other years, you'll see some major fluctuations when it comes to cap rates. Now, keep in mind this, when a 4.9% cap rate may be something as an investor or as a company you're willing to live with. That may be a good deal for your asset strategy. But maybe for other investors, that's too risky or not a deal they'd be willing to entertain. This is why, again, it's so important to understand your strategy to see if it works within your guidelines of what you're trying to achieve with that property. And for a video recap today, keep in mind these two dynamics when it comes to what a cap rate is and why and how is it used. Remember the formula when it comes to what is it. You really want to make sure you understand that NOI divided by your market value equals your cap rate. So again, market value could also be determined as what maybe an investor is willing to pay for that given asset. So understanding what an NOI is also really important when it comes to this formula. Oftentimes when it comes to how is it used, and this really answers the second part of this video. This is most common when it comes to a property that may be refinanced on the market to be sold. So these are the most two common reasons why, but there could be outside reasons why maybe a cap rate or that term and number is being floated around. So understanding what's going on at your property and understanding what a cap rate is and the most common uses is really important for you as from an operational standpoint, and understanding how you can affect that cap rate in a positive way by improving your NOI is a big component of it. And just remember, a cap rate to maybe one company or bank or lending institution may work very well. That's not necessarily a number that they're willing to live with as far as lending or as far as a part of their strategy they're looking to achieve in the long or short term. So understanding your strategy is going to be a big part of understanding what is a cap rate that works for your property and or company. If you enjoyed this video and you learned something new, please don't forget to like, subscribe, and turn on notifications for future videos. Before putting any of these practices into place, please watch our updated disclosure video as well as our updated why we do this video, which is the channel's why. And I'll be providing a link to both of those in the video description. And to stay on top of industry news, polls, and video releases, please feel free to connect with our LinkedIn and our Instagram page. If you have any questions about this video or any of our videos, feel free to leave a comment. I'll be happy to address it for you. Happy leasing!